Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be talking about wick pockets. And this is something that, it's one of those things that once you see it, you can't not see it. It's like the crooked tile in the rest of the bathroom is normal, and that one's just a little off center, you know. A wick pocket, effectively what I'm looking for is, first off, a prerequisite of a decent trend. Now, we're not talking about a trend way out here. I'm not talking about this kind of trend, right? I'm talking about a very short term. We're zooming in here, and we're looking at the micro structure of what's going on in this move. So this type of trend, right? So when we have this kind of momentum, what I'm looking for these wick pockets are these zones that are created by these wicks, and it's kind of this barrier of interest that ends up showing up. Now, a wick pocket, in this case, I'm going to take the lowest close that we have, or the lowest open, or whatever happens to be down here, to the lowest point of the wick. And I need at least 2, but preferably 3 wicks that are confirming this level, that are showing a zone of interest. And that's going to give us an area where the market is going to want to pull back to as a zone of value. Might not be today, depends on how strong of a rally it is. But when we start zooming in and we look at this on a more aggressive scale, as an example, when we're over here, we have this really, really strong move up, big wick at the bottom, another big wick at the bottom, but they're too separated. That's not what I'm talking about for a pocket. I want to see them stacked up and proven. So if I started off here and drew across, we could easily modify this down to the lowest close. Remember, the lowest close or open, so we can go across here. And this creates our wick pocket. We have 3 candles that are confirming this zone. We come back, it's supported, it's supported, it's supported. And in fact, we create another wick pocket in here, which here again is 1, 2, and 3 candles confirming. It's supported, supported, supported. If we're looking at it from a resistance side, you can find this across there as well. And that was across the high, where we have 3 candles that are confirming. It was resisted, resisted, and even a little bit later, resisted. Going across, we had another pocket that set up, but there was only 2, a little bit harder. You can still see, though, nice amount of resistance back and forth. And these can be effective, very, very effective when you're talking about ranges and you're trying to find the bounds of that range. But really, my preference is to find the prevailing trend first, so in this case it would be up, looking for that pocket to show support, or at least in the direction that I'm looking to go, and then find the market to at least show me 2 to 3 candles, and then come back for the 4th, 5th, 6th, as many times as they want, as long as they don't break it, and look for the continuation back to the upside. These wick pockets can be very, very nice to use on these 5-minute time frames, especially when things feel like it's just dragging on and going so slow. You know, there'll be these periods where the market's exploding with these beautiful moves, and then this happens, right? Well, you know, what am I supposed to do in this? Well, it's easy. What's the trend? The trend is up, so let's find some wick pockets that are bullish. We come down here. This is the initial point of interest. They try breaking through it, doesn't close through it, it just expands it a little bit further, right? So we expand it a little bit further. They expand it a little bit further, but doesn't do anything about invalidating it. It does refine the top down a little bit, though, so we can narrow it in a little bit further. We know that this is a major zone of interest. If they come back, they hold, they hold, they hold, and it's off to the races back to the upside. That's the type of information that we're looking for in a much nearer term. That's not to say that you can't use this on a 15-minute chart or a daily chart on whatever instrument you want. You most certainly can, but just remember that it's a much more zoomed-in perspective. Now, one of my favorite ways to use wick pockets in any type of major support zone like this is to zoom out to a wider time frame and look for these to line up and give me areas to keep an eye out when the market comes back. As an example, we can see that there is a metric ton of wicks that are forming down here, but it finally refines itself over here. You've got 1, 2, 3, 4 candles confirming, and even a 5th one for a test. So those are all the areas of interest where the market is demonstrating support. Now, as we're going a little bit further up, obviously the market was diving down. What about resistance, right? What about being a seller? Well, we really don't have anything until up here. And guess where we are now? So this creates a zone of interest where I could easily zoom into a faster time frame and find a valid reason for a possible short. It's a really, really nice way to create zones of interest from a wider perspective that the market can reach out to or run to as an objective or a bounce point that it can then later on use for really nice turning points. So let's take a look back at an example over here that stands out pretty obviously. We've got this really nice drive down, but then it stalls out, back and forth, and it finally rallies up. So they confirm right there that that's going to be the zone of interest. So what we want to see is when the market comes back, what does it look like on those faster time frames? And that's really where the usefulness comes in. So when it gets back to that zone, let's go into a 5-minute chart. Let's go back and try to find that, that circle. There it is. And when the market creates that zone of interest, although it looks like there is actually a really nice bounce inside of there, when the market comes back, all we're waiting for is the proof. Right? It tries to bury itself through, tries to get underneath, traps the sellers, giant bull bar up. Sellers realize that they're really screwed, and then it goes screaming all the way to the upside. You know, depending on the time frame that you're looking at, these are really, really nice zones to narrow in on and find some solid zones of back and forth support and resistance that you can use for intraday setups as well. So that's going to do it for the overall wick pockets and the idea and concept of them. They're really, really nice to have, just as far as overall back and forth, sideways ranges that are with a continuation of an overall trend. One of my favorite ways to use them. But these are definitely applicable within ranges as well, just to give you an idea of where the outer bounds are and where value would be. If you have any questions about it, of course, drop those in the comments below, or if you have a more detailed question, shoot me an email, jhb@ssftg.com. Until the next video, though, enjoy, rest up, and we will see you all then. Thanks.